Our latest housing pulse finds mixed conditions across the housing markets in Australia. Overall, we're seeing a little bit of positivity coming in off the back of the RBA's rate cuts, but turnover's still pretty slow. And actually, the response to rate cuts hasn't really been that decisive so far. Price growth, it looks like we're tracking across all the major capital cities, something in the order of 2 to 4% this year. Really does feel like a transition year for the housing markets, with nothing, momentum neither here nor there. We're seeing some initial hints that of a pickup in response to those rate moves in some of the more cyclical markets, but in general, it's still pretty slow going. Looks like that's going to be the theme for this year. And the macroeconomic backdrop is panning out as we expected. A gradual easing cycle from the RBA, not a rush of rate cuts. Very unsettled backdrop as far as global growth goes, and fairly sluggish growth domestically as well. So that part is tracking in line, and I'd say the view on the housing market in general is tracking in line. There are some interesting features across markets as always. Some are still dealing with a bit of an overhang of on-market supply. That's improving in the case of Melbourne. Others are still extremely tight. Adelaide on-market supply is less than 2 months of sales, so very hard to find suitable properties in some markets. Those Brisbane, Adelaide, Perth still outperforming slightly, but coming off a stronger 2024, so they're sort of slowing in general. A bit more of a rate cut response in Sydney and Melbourne, but still not really decisive. So there's a lot of interesting stuff in the detail as always, and I direct viewers to seek out the report in full. We revisited something we looked at back in February. Every year we've been running this Westpac home ownership survey. It runs in January each year. It's a deep dive into Australian household plans for home ownership, renting, buying, investing, the whole gamut. And the main theme back in January this year was that there was signs that there was a lot of pent-up demand for house transactions, and some of those plans were being pulled forward, particularly for upgraders and investors. And so we took a bit more of a deep dive into that to really identify where are these pockets of pent-up demand likely to show through. With the upgrader segments, it's particularly New South Wales, Victoria and South Australia. It was interesting that Western Australia was at the other end. Wasn't so much evidence of pent-up demand around upgraders there. And around investors, again, New South Wales, Victoria, Queensland, and interestingly South Australia. There are more consumers in South Australia looking to move ahead with investment decisions this year. There's other colour in there as well. What's interesting in terms of the gravity, we saw previous surveys that there's been this gravitation towards detached houses and townhouses, and less inclination towards apartments. That's still in there. There does seem to be a slight increase in the size of dwellings that people are looking for. 3 bedrooms is still really the sweet spot, but on average it's a little bit more skewing towards 3 or slightly higher. And interestingly, when we look at location decisions, the bulk of buyers are still intending to buy in capital cities. And very interesting is that when we look at the baby boomers, those aged over 60, there's more of an intention to move, and it's really gravitating towards capital cities. So regional areas not really picking up the marginal buyer interest in that particular age group. So lots of additional material there around at the state level especially. So one of the interesting features over the last year has been across almost every capital city, we've seen this outperformance of lower priced properties and mid-priced properties compared to the top tier. And we take a closer look at this pattern within each of the capital cities over the last year and also historically. What's interesting and perhaps surprising is that those tiers have outperformed the top tier markets for quite a while now. The best part of 10, 15 years they've outperformed slightly. But it's a very cyclical story. What we find is during the upturns, the top tier really takes off, but the top tier is also more prone to price corrections. And so in the moments when the markets are stable or correcting, those middle and lower price tiers hold on to their value much better, and so they perform better over the course of the cycle. I think that really helps with providing clues around what's happening in the market. So for example, the interest rate cuts that we've seen this year, we have seen a little bit more life in those top tier markets. So there's a few bellwether ones that are hinting at a response and maybe a cyclical upturn starting to form, but it's not really decisive at the moment. Now it's important to note This is really a city-by-city story. Now, when we look at tiers at the national level, the cutoff for the top tier segments is 1.2 million. The cutoff for the lower tier to mid-tier range is 700,000. So, as you'd expect, the top tier is dominated by Sydney and Melbourne properties. The lower tiers are dominated by other markets. So when we look nationally, those variations are really just about city to city variations. And we know there's a lot of city-specific performances that come into play. Once we sort of strip out those effects and we're just looking at tiers within each market, we get a clearer picture around these differences in cyclical behaviour and the way that lower and middle tier prices hold on to their values a bit better. And also raises, we can turn this around another way. To get a really vigorous upturn, you need the top tier to really be in a cyclical positive mode. But you also really need one or maybe two of the capital city markets to be performing very strongly. So to get a boom nationally, you need decisive booms in one or two markets to be leading the way. And maybe that's a way to think about that. At the moment, it's hard to see a capital city market that's really poised to see strong price growth. The mid-sized capital cities, Brisbane, Adelaide, Perth, have just come off a very strong few years. It's hard to see them returning to those very vigorous growth rates. Sydney and Melbourne, there's other issues at play. So I think this all sort of reinforces the notion that we're in this transition year, an affordability-constrained market in most cases, and a medium to slow growth environment for prices nationally.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published, or reproduced in whole or in part without the prior written permission of Westpac.